I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign. I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign. I wanna be the great.
As you can see on my chart, we're looking at today market structure series 2. This is the second edition of our market structure series. If you have not watched the first edition of the market structure series, I would advise that you kindly pause this video, go to the link and watch it for yourself. This is the video right here. Okay, this is it. You see market structure series. This is the first edition. Go to the video, watch it out, then you can come back and continue with this series today, this edition 2. I will also drop the link in this video description. If you are new to this channel and you have not subscribed, please, you just have to do that. You don't want to miss out on this series. So hit the subscribe button, give this video a thumbs up and hit the bell icon so that you will be the first to be notified of our next edition. Watch out for the third edition of this market structure series. Today, I'm going to be looking at what you can see on my chart, market structure recap, or what is market structure. In this video, which I spoke about now, we looked at market structure, then we looked at how to identify trends and other interesting things. You can pick that out yourself. Today, the course content will be looking at what is market structure, that's market structure recap, types of market structure, break of structure, and then how to identify a break of structure. And lastly, we'll be looking at how to trade market structure. And then if we have enough time, I'll be taking you to the chart to show you some few examples and then to walk you through what market structure is all about. All right, let me start by saying, let's go to the first thing, market structure. Market structure recap. What is market structure? As I said in the previous video, I want to say it again that market structure is the foundation of forex trading. And simply put, market structure talks about what price is doing, price action. What is price doing at that particular time? That is market structure. What is price doing? That's what you want to find out. So that is market structure. All right, I think I should write that. Everything here. Market structure. What is market structure? Market structure is the foundation for forex. Structure is price action. Say what price is doing at time. Want to find out what is price doing at a particular time. Market structure is the foundation forex trading. You want to find out what price is doing per time. This is not too long. Okay, that's simply market structure. What is price doing? What is happening? And I want to say that ability to identify what price is doing per time is the foundation you need for profitability in the forex market. You want to find out what is price doing, is price making, going on a downtrend or going on an uptrend, is price consolidating. That brings me to the second content, types of market structure. We have basically, as I said in the first video, we have two types of market structure, but today I'm going to be talking about the bullish market structure, bearish market structure, and the consolidation market or trend, as you would want to put it. Bullish, bearish, and consolidation. What to look at. Why is this taking time to load? Okay. So types of market structure, I'll say, please work with me. Types of market structure. I'm taking these things from taking it step by step so that even a beginner can catch this without stress. Types of market structure. Let me use this. We have bullish market structure, bullish trend or structure. This is what is also referred to as the buy market. And then we have number two, I want to talk about the consolidation before I talk of the bearish market. And number three, I'll talk about the bearish trend. These are the types of market structure. We have the bullish trend or structure, consolidation market, and then we have the bearish structure. These are types of market structure. Let me add this. Let me take this as 2. All right, I think I should just get it like this. 2. Okay. I hope we are getting it. So market structure, simply what price is doing per time. What is the trend of the market? What is the history? You are putting history behind price. What's the history of the market? What is happening? What has been happening in the market? So as you open your chart, that's the first thing to identify. What is the structure of the market? And once you're able to identify the structure of the market, then we can begin to talk about the types of market. Then you can now know how to trade such markets. Is this. I'm just trying to look for a way that you're able to see it very, very clearly. Okay, let's talk about number one, the bullish trend or bullish structure. Bullish trend or bullish structure. This is the buy market. Bullish trend or bullish structure. Market is said to be bullish when it has these categories. Okay, let's show in this red. Bullish trend. Right. Let's show this. Market. What's that? Just work with me, consultation market. I want to ensure I put everything out. This is a training, this is a lecture, is a teaching step by step. So I don't want to rush it. I want to ensure everybody is carried along. Okay, let me bring this here. Then on the other side, I'll put the bearish structure. Bearish structure or trend, whichever way. These are just the 3 types I want to talk about today. These are the types of market structure that we have: the bullish trend, consolidation market, and the bearish trend or bearish structure. Now, what is the bullish structure? This is simply when price is making a series of higher highs, series of higher highs. That is bullish structure. This is when price is making series of higher highs and higher lows, so we can say that is for short higher highs and higher lows. This is what we term as a bullish structure or an uptrend. This will term to as bullish structure or an uptrend. Did I miss anything? Oh, Jesus. Okay. I missed that. Let me write this again. Bullish. Sorry for that. I missed it. Okay. We're good to go now. So it's back. This is bullish structure. Series of higher highs and higher lows. So, this will be better so that everything can come under. Yeah, something like this. That's what I want. Something like this. This is simply when price is making series of higher highs and higher lows. Like I said, okay, let me give you an example. You have this to this side. This is simply a bullish structure. Price is giving you, this is a low, gives you a high, gives you a new low, then goes and gives you a higher high. Comes, give you a higher low. Why is it a higher low? Because it's higher than this, a low is higher than this low. This low is higher than this low. So it gives you a higher low, gives you a higher high, gives you a higher low, and then gives you another higher high. This is a bullish structure or a buying market. This is simply what we mean by a bullish structure or a bullish trend. The market is giving you series of higher highs and series of higher lows. So this is my, okay, I think I should just write on it. I didn't do that in the first edition, so let me write on this. So we have a low, is a low. Oh, is a low. This is a low for me. So it's a high. The next one is a higher low. Higher. This is a higher low. Is a higher high. Is a higher high. Why is it a higher high? Because it's higher than this. This is a higher low. This is a low. This is a low. It's higher than this, but lower than this. So this is a higher low. It's higher than this low, but it's lower than this. So we have this. I can clone this to, yes, higher low. It's a higher low. It's a higher high. This is a high. see. So this is simply the bullish structure. Price is making series of higher high, higher lows. A low, a high gives you a higher low, is higher than this. Higher high, higher than this. Higher low, because it's higher than this. Gives you another higher high, is higher than this. Gives you a higher low, is higher than this. So this is how you identify bullish structure. Bullish structure. So I can just come and I'll do this. Okay. So you understand that now if I put this now and I put HH, you know what it means? It means higher highs. Higher highs. And clone this. This is a higher high. So I'll remove this. So this is a higher high now. This is a higher high. And this. While I clone this. This is a higher high. You see that I have to write it out so that you'll be able to comprehend it. So this is a higher low. HL. That's the short form, that's my higher low. I can remove this and then I bring this here. It's a higher low. This is the higher low. Get it now? So there's a low. I represent this by just putting at ordinary L. It's a low. This is a bullish trend. Simple. Price is giving you a high, a low, a high, a low, a high, a low. All right, let me take you to, let's see, come here. You can see what price is doing here. Price give us this, give us this, give us this, give us this. This is opposite. This price is going downward, just in that order like that. Okay, this is bearish. Now let me take you down to, let me not leave the time frame. Let me take you down to, okay, this is just the structure we're talking about. Price came, gave us this, gave a higher high, gave a higher low, gave a higher high, gave a higher low, a higher high, give us this small low here, move up, give us this high, give us this low, hit this high, gave this low. So it keeps going in that order. It couldn't make a high, it came here, and then the next thing as you come. Now we're going to look at all of that. So this is a bullish structure or a bullish trend. All right, let's go straight to the next one, the consolidation market. Consolidation market, this is simply when price is within a zone. There is a zone, and then price is just moving within that place. Okay, let me use this. In this place, price is just moving within the box. Within, this is a zone. Price is just within this zone. So, consolidation market. This is simply when price within zone, within a region. I don't want to say price cannot be in a singular place. Sometimes it can just be within a zone, and that's just consolidation market. That's consolidation. Price is within a zone. So you can have something like this. You can have something like this. Price moves from here and then comes here, tap here, go here, tap here, come back to this place, tap here. Then retail traders, they go in for the double bottom. Price comes here, give something like this, give something like this, maybe like this, maybe like this. It's just within that zone. It goes up, pushes up, and come down. This is simply a consolidation market. So it comes here and comes here. This is a consolidation market. Price is within that zone, within that region. This is a consolidation market. What you are going to find in a consolidation market. I'm going to give you examples. So I'm going to go to the chart and then I'll show you example. I do hope you are getting value from this lecture. If you are, you can simply hit the subscribe button, subscribe to our channel, hit the bell icon, and ensure you like our page, share with your friends and every other person so that they can also come and learn. This is the foundation market structure. If you miss this, I've said it over and over again, you don't have any business in the trading environment. Okay, now let's go to the next one types of market structure. We have the bearish structure or trend. Now, what is the bearish structure? This is simply when price is making series of lower lows and lower highs. Price is making series of lower lows and lower high. Let's see if we can write that. This is when price is making series. Okay, let me just get this. This. Okay. Okay, I think this is all is when price making a series of lower lows and lower highs. So it's going to be lower lows. All right, this is when price is making series of lower lows and lower highs. Let me just give you examples so that you don't get bored. You have price coming like this, comes down. This is a high, gives us a low, give us a lower high. Because it's lower than this. This is a high, this is a low. It gives us a lower high, and the price comes and gives us a lower low, lower than this, comes up again, gives us another lower high, gives us a lower low, gives us a lower high, gives us a lower low. This is simply when you say the market is bearish. It's bearish, or it's trending downward, or this, you call it the sell market. This is when sellers are more in the market and they are pushing price downward. This is the bearish trend or the bearish structure. So first of all, you need to identify what market is doing. If you're able to identify what price is doing at a particular time, then you'll be able to paste. Can I paste? Okay, yeah, it can. So this is a lower high, lower high. Okay. This is a lower high. Now, on this is a lower low. So this is very simple. You must be able to. This is a high. Let me see if I can close this. I can find it. What did it? This is a high. So market gives you a high. It's okay to understand it. Then market gives you a lower high, comes, gives you a lower low, and then it goes up, gives you a lower high. Then the next thing comes, give you another low that is lower than the previous low, is lower than this previous low, gives you a lower high. It's a high, but it's lower than this high. This is a high, this is a lower high because it's lower than this. And the market comes, give you this low that is lower than the previous low is lower than this, so market comes, gives you this low, and then market is just moving in that order. Market is moving in that order. This is what we call market structure. This is the first thing to be able to identify. So is price going upward? You want to be able to identify that. Or is price moving downwards? You should be able to identify that. And when the price is static or within a region like this, we call it the consolidation market. Most times we advise beginners and learners to be able to stay away from the market at this point, because they may not be able to trade this kind of market. So we advise them to just stay away from the market at this point. I want to believe that we are following this second edition of the market. Okay, let me put this here. Okay, for retail traders, when price comes here, they want to take a buy from the second touch on the trend line. They want to take a buy from here. But to us, to smart money traders, these ones are tons of liquidity. They are telling that market is going to come, price will come here to kick all of them out. Price will come to kick them out. So you don't want to jump in and then get clapped out. So we advise that just stay away from the market. You see how this 1K cleared everybody that was here and then went up, cleared everybody that was also here. So these are footprints on how to identify market structure. All right, let's go to number 3. I wouldn't want to delete this, so let me go to a new page. We'll be talking about break of structure. What is a break of structure? What is a break of structure? What's a break of structure? Okay, let's remove this, remove this. Let's talk about a break of structure. Break of structure is simply, this is content number 3. So break of structure is a change in the direction of price. A change in the direction of price. Break of structure is simply a change in the direction of price. Change in direction . That's a break of structure. Very simple. Change in the direction of price. So we have break of structure. This is break of structure. So this takes me to what I want to. I'm going to give you a typical diagram so that you understand what a break of structure is. Market is changing direction. There's a shift from the original trend to another trend. This is what we call break of structure. The market is turning, is changing, is moving, changing direction. There's a direction shift or change of character. This is what we call break of structure. You cannot, sometimes you see us write BOS, that's what it means, break of structure. Some people write change of character, whichever way, is simply how to identify when market has decided to change price. So let's go to item number 4 on our course content, identifying a break of structure. How do you identify a break of structure? Price is moving from a bullish trend now to a bearish trend. That is just how to know a break of structure. Formerly, it was forming a series of higher highs and higher lows. All of a sudden, market changed course, and now we're having a lower high, lower lows, series of lower high, lower lows. That is a change, a shift in price or a change of structure. It is simply telling you that the previous trend is coming to an end. There's a shift in price action. So let's look at how to identify them. Item number 4, how to identify a break of structure. So I'm not just going to do a lot of writing this time. let's just go like this. We have this, we have this. We have a series of higher highs, higher lows, another higher high, another higher lows. All right, just 1 minute. Let me answer this call. So price goes here and then comes back, gives you a higher low, makes another higher high, gives you another higher low, and then it gives you a higher high, and all of a sudden price comes and breaks this. Once it breaks this lower high, the next thing you'll be seeing is going to be giving you a lower high, a lower low, a lower high, a lower low, lower high. Just stuff like this, stuff like this. Just stuff like this. So it may not be picture perfect, but I think you'll be able to get the one minute, please. Okay, so we have this as a break of structure. Price has been giving you a series of a higher high and then a higher low, higher high, higher low. Price gives you another higher high, gives you a higher low, gives you a higher high, and price comes and breaks it. So this becomes your break of structure. This is your break of structure. Break of structure. So whichever way is your break of structure, So I think I just put the BOS so that it's not too long. This is your break of structure. This is what it means. Price breaking this lower high. This is the last higher low. Price comes and broke this last higher low. Higher low. After forming a higher high. Price broke this higher low. Remember, this was the last higher high. Yes, this was the last higher high. This was the last higher high, and price comes and break this structure, giving us a lower low. So this is a lower low. This is not a lower low. And this is a lower high. You see the way price shifted, this is now a lower high. So we call it a shift in price. Price moves from higher highs to higher low. Price moves from a higher high and low. All right, then price moves from here and begin to go in a different direction. Giving a series of lower high, lower low, lower high, lower low. So this will call a break of structure. It signals the end of this bullish trend. This was the bullish trend. and price signals that it has come to an end, it's not going to continue in that direction. This was a bullish trend, and price comes now and comes into a bearish trend. Okay, this is what we call a break of structure. I want to believe it's clear, but I'm not okay with this. Okay, all right, let me just finish this. Let me finish this. Let me clone this. We clone this and have this that you're able to see. If you want to, you have the video here. Please watch it over and over again. You have any place you don't understand, go over the video again. Watch it over and over again, and then you'll be able to understand what we are talking. Is very simple. Just keep it simple. Don't stress yourself. Keep it so simple. And that's how you'll be able to understand it. Keep it simple. Price keeps going in this direction. All of a sudden, there's a change, and price start moving in the opposite direction. This is how to identify a break of structure where price moves and close below. So in a bullish market, when price closes below this, it turns from a bullish trend to a bearish trend, and then a bearish break of structure, price comes, and after making this low, comes here and break this, give you this, and give you this, give you this, and up we go. Okay, let me remove this. So price comes and then close below this. This is a break of structure. The same thing. It signals the end of the trend. It's telling you that the trend has come to an end. Let's say that the trend has come to an end. So this is a bullish break of structure when price breaks downward. So it's a break of structure to a downtrend, and then this is a break of structure giving you an uptrend. So price closes below the lower high. In a bearish break of structure is when price close above this now. This price close above the previous lower high. That's when it's a break of structure. It's trying to tell you that the end of this downtrend is over, is signaling the beginning of an upward trend. Please take note of that. It's very simple. Keep it simple, and then you will not have stress identifying break of structure. So this is a higher low, and then a higher high this way. Get it now. So in that order, price keeps going up. In that order, price keeps going. A higher low. All right. The next content is how do we trade market structure. If you come back to this video, the first edition, you're going to see the markup I did there. It was a very nice markup, and you're able to see the entries for trading market structure. So if you have not watched that, please kindly go there and watch that video. You can look at these are trade ideas of VIX 10S, 51S, 101S. These are different trade ideas I dropped, and we are currently on some of the trades that we caught on a lower time frame. So subscribe to this channel, follow us, and then I'm going to be giving you some other topics. We are going to be taking this thing step by step. We've done first edition, this is second edition, step by step. so that you don't miss out. This is the foundation. If you're able to get it, okay. So let's go to how to trade market structure. Now I'm going to take you straight to the chart so that we see um, how we can get an entry. Remember, I said if you are on a bullish structure like this, you wait for the higher low to take your trades. You take your trades from the higher low. Yes, we've said that you want to trade, you take your trades from the higher low. Wait for price to come down here, and then you join. Wait for price to come down to the higher low, and then you buy. You don't want to start selling when the market is buying. You want to wait for price to come down, retrace down, and then you join the buy from here. This is how you trade a bullish structure. And then you want to trade a bearish structure, wait for price to retrace back, and you join from here. Join from here. That will be the entry. Price goes down, then you wait for it to come back to this place, and then you join from here. Price comes back here, you join from here. So you'd have had an entry here. As price sell down, you wait, it retraces back, you enter from this place, you enter from this lower high, take it to the lower low, enter from this lower high, take it all the way down. This is how to trade market structure. Now let's go to the chart so that we can just identify some few things. This is 101S. As you can see, we can go back and back and back. This is the daily time frame. Let's just see what the price has been doing for some time. Start from here. Price gave us a high, gave us a low. What did price do? Price gave us a lower high because it's lower than this, and then price came, gave us a low. Okay, I can take this as my low because the body closes below. Price came, gave us a lower high. You enter from here, you start selling from here, and then price gave us a lower low. Then watch what happened. Price came here, it couldn't break. It came here and broke. So this becomes a break of structure because this is the last lower high. Price has closed above the lower high. So this is the break of structure. What did price do? Price retraced back and gave us, now that price has come, has given us a higher low because it's higher than this low. And then we expect price to give us a higher high. Price couldn't give us a higher high. Price gave us this. That's where we are now. And then price came back, broke here, and came into this candle. Let me stop here. So if you see, price has given us this. Since we didn't close above, this is the last higher high. It gave us this. It came into the candle, sweeping this as liquidity, and price came here. So we are hopefully price might move from here and give us, this is the low now. Price might just go up and give us this. I get now. So these are break of structure that was here. Here being the last previous higher low, high low. It gave us this as a lower high, give us a lower low, give us a lower high, give us this, and then price closed above this lower high, telling you that this bearish trend has come to an end. We now want to start going bullish on this asset. So price came, gave us this, closed above there, came here, couldn't close. So long it has not closed above this, this still remain our higher high. It came now and gave us a lower low. So I can remove this from here and just make this. This was just one move down, and the price can give us this. So, but if we go to lower time frame, we have price reacting at this imbalance. We caught a buy, we're still on the buy. This is just market structure basically, just following the trend. Okay, let me check another asset. Okay, let's say the 1,000. Let's say 1,000. Let me just give you, these are examples of how to identify a break of structure and how to trade market structure. That's what we are doing right now. Let me go to the daily time frame and show you from the chart how you should trade market structure. Okay. Watch what price has been doing over time. You can see price gave us this and then give us a lower low, give us a lower high, give us a lower low. Gave us this, it closed above this. Okay, but it didn't close above this. So this is the lower high, this becomes the lower low in this order. price keeps going. Price keeps going down. Price keeps going down. Now, within all these places, there are going to be different moves and different on lower time frame, how to catch all these ones. We're going to do all that. But this is basically how you trade market structure. So let me just maybe draw this and see if we can have a clean sheet. How do you trade market structure? So this, let me just use a bearish market for instance. You have something like this, something like this. Price comes and give us a lower so this. These are on smaller time frame. You see things like this, and then just want to see how you can, you call this flat pattern and all of that, but whichever way you call it, price comes, this, something like this, like this, test, and the price breaks this place, then comes, something like this. It didn't close below this place, close like this, maybe like this, it goes back again. On lower time frame, on smaller time frame, these are what you're going to find. A price comes, gives us like this, gives us like this, gives us like this, and then gives us like this. So this is a typical example of what you're going to find in the market. It might not be picture perfect, but it's going to be something like this. So let's see, you have this, and then price came and broke this structure. So it's a break of structure for me. Just coming lower, low, lower, high, lower, low, lower, high, lower, low, and then price begin to go in. Okay, this might be just what I call this now, a flat pattern. Okay, whichever way, it just goes in that tunnel, and just something like this. Price goes like this, and the price came, broke this place. This was the last lower high that gave us this, but it closed above this, and then it came and began to give us a lower high, gave us a lower low. So this would have been your entry. This would have been a good way to enter. This would have been another good way to enter entry, and then this would have been a good entry. Why would here be a good entry? Because price came and broke here too. This was another break of structure. It kept going and going in this order. All of a sudden, it broke this place. Let me put US here. Yeah. Structure here. Price came, broke the structure, giving us this. Now, these are just how you trade your market structure. This how you trade market structure. Price came here after giving us this high. That price give us this, something like this, give us something like this. So we're expecting price to come back here. Price came back into it. It couldn't break. It came here, tested here, went back into this zone, which was here, went back into this zone. Went back into this zone, and then came. Now it has broken here. It came back and retested after breaking here, retested this point. We should have given you an entry, and then it gave us a lower low. This is just how to trade. You want to wait for price to come back to that last move, and then you keep taking it downward. I'm going to be stopping this from here. Thank you so much for your time. Please go to my YouTube, subscribe, like, share my videos. Let people begin to jump in and watch and get knowledge. You must pay the price for knowledge before you want to trade the Forex market. Thank you so much. Peace out.